Good morning, traders. I'm Emmet, and welcome to BCR's Daily Market Insights. Let's focus on four key markets today: the US dollar index, DXY, crude oil, spot gold, and the Euro USD. We'll start with the US dollar index, DXY. The greenback is holding steady around the 109 mark, reflecting a strong consolidation phase. Inflation concerns continue to dominate sentiment, fueled by hawkish signals from the Fed and rising US bond yields. Investors are bracing for Friday's non-farm payrolls NFP report, a critical release that could offer further clarity on the Fed's rate policy. Geopolitical tensions and ongoing trade uncertainties have added to the demand for the dollar as a safe haven asset, limiting any potential pullbacks. From a technical perspective, DXY remains well supported above its 20-day moving average at 108.19, with bullish momentum evident as the RSI trends upwards at 64.85. Key levels to watch would include resistance at 109.37 and support at 108.69, where buyers may look to re-enter if sentiment shifts. Shifting to commodities, crude oil is trading around 73.50, navigating a fine balance between bullish and bearish pressures. Supply concerns continue to support prices, particularly as US crude oil inventories decline for the seventh consecutive week, signaling tighter availability. Additionally, geopolitical risks, including new sanctions on Iranian and Russian oil exports, have further restricted supply and boosted prices. However, a strong US dollar has capped gains for crude as it increases costs for non dollar buyers. Technically, crude oil is eyeing the resistance level at 74.65, which aligns with its 200-day moving average. A break above this level could pave the way to test the psychological $75 mark. On the downside, support levels around 72.50 and 71.23 may come into play if bearish momentum intensifies. Now let's have a look at everyone's favorite, the pet rock, spot gold, which has seen some impressive gains this week, trading above 26.70 for the first time since mid-December. Despite its strong performance, gold pulled back slightly in the last session because of rising US Treasury yields and cautious trading due to softer inflation data from China. Concerns over weak economic demand in China, coupled with a strong US dollar, have added pressure to the yellow metal. Technically, gold appears to be consolidating after its recent rally. Key support lies at the 50-day simple moving average of 26.44, while immediate resistance is seen at 26.65. A break above this level could open the door for further gains towards 26.92 and the critical $2,700 mark. Moving on to the Euro USD pair, the Euro is trading around the 103 mark as the US dollar strength continues to weigh on the currency. Investors are awaiting Friday's NFP data, which could impact the Fed's policy outlook and provide direction for this major currency pair. On the European side, the ECB's dovish stance amid ongoing inflationary pressures has limited the Euro's upside. From a technical perspective, Euro USD faces a significant resistance at the 20-day moving average around the 103.96 mark, while support can be found at the January 3rd low of 102.58. A break above 104 could signal a short-term recovery, but for now, the pair remains under pressure with a bearish trend. As we approach the weekend, all eyes will be on Friday's non-farm payrolls report for December. This key release will likely set the tone for the markets in the coming weeks, particularly as traders assess the Fed's next moves and the broader global economic conditions. Stay informed, stay prepared, and as always, happy trading.